As we said, Tesla's up in the pre-market. Last month, the company tripled production at its Shanghai plant, sold more than 32,000 vehicles made in China. That's according to the country's Passenger Car Association. Meantime, UBS does upgrade to buy, says the operational outlook is stronger than ever. Jim, they talk about record backlog, margin momentum, 2 new gigafactories, structural competitive edge in supply chain. They raised their earnings per share for the next 3 years by up to 40%.
Yeah, you really want to buy the stock after you read this. I think the headline says it all. Time to be bold. And I think that they're making a call that just says this thing has come down enough. The China news, I think, is it's a verification of what we've been hearing. But I think this innovative kind of just going away from the pack is once again a way to be able to say that Ford and GM don't have what it takes. That's going to become questionable once GM really has the Hummer. Large-scale production. I do believe that the Ford F-150 Lightning is a challenge. But, yeah, I mean, Tesla is just doing better than everybody. It is a little aggravating because everybody else is really trying hard, but Tesla's just way ahead. David, when I read what the analyst has to say, there is just a sense, Patrick Hummel, that China must somehow really favor these guys. There's just no way they could have such a ramp in China without the government saying we want Tesla to win.
That's an interesting point, Jim. I have no sense as to whether that's the case or not. But listen, what is it? 60,000 units have been lost due to the Shanghai lockdown. And then he goes on to say they expect Tesla to reach 1.4 million deliveries this year, resulting in a moderate 12% EPS cut versus prior forecasts. What caught my eye as well, though, is just sort of the out-year targets. Almost $50 billion in EBIT in 2026. I mean, that is still 4 years out, but $50 billion in earnings before interest and taxes. Put a multiple on that, and, you see sort of where you end up on a valuation. Obviously, their discounted cash flow model, they say, gets them back to $1,100 price target right now. So that gives you a sense.
Yeah, this is an urgency. Carl, this is a piece which just is a clarion call. It's just saying, get in. And almost every single line item is much more positive than most people think. I think it's a gutsy call. If the interest rates weren't going higher, once again, I think this would be a fabulous call. You need to see rates lower to be able to make this thing so that the stock could be at 50 and not just 20.
Right. Jim, you mentioned some of the competition, but part of this note involves the supply chains that Tesla has locked up. Do we believe their rivals have done the same? And then the charging network, too, is going to be an education curve for some of these legacy OEMs, isn't it?
Yes, I think the others are still scrambling. I think the others, they are a couple of years behind him. But I think Ford does have a lot of be able to have what it takes for Lightning, but not to meet the demand at all. I think that the demand far exceeds the supply. Whereas with Tesla, look, every time they put out a car, it sells. And this piece just tells you that the company's more liquid, stronger than everybody with a better supply chain. It's an extraordinary piece. It's really well researched. And I think that the fact is that Tesla, people are in awe of Elon Musk out here. They are not talking about what's going on with Twitter. David, they don't care about Twitter. They care about the fact that somehow this person, Elon Musk, has transcended all the problems that they see and is putting out something that everybody wants versus a lot of the companies out here.
Yeah, it's interesting. They don't want to talk about Twitter at all. I do wonder if he's gotten any pushback even from employees at Tesla and or SpaceX saying, what are you doing? We don't want your time divided in any way. We don't want your attention taken away from what we're up to. Whether that's figured into his decision-making at all. By the way, on Twitter, I mean, not much to add.
Point.
What?
That's an interesting point. I mean, Twitter is an asset that is going to really hard to get growth. Everything else he does, growth is at his feet.
Yeah. I think we can all assume that he has had some regrets about his willingness to pay $54.20 for Twitter. I don't think you're going too far in saying that, Carl, given all his actions since then. There were some reports yesterday that Twitter said, sure, have at it. We'll give you the unimpeded stream of tweets to comply with your demands for data. But again, everything I can find out at this point still indicates they'll wait for the vote. They'll wait for the shareholder vote at Twitter at this point, it would seem. And then when he doesn't close, they will end up in court.
Was that at the Time 100 dinner you got that?